What's good, everybody? Israel not coming back at you on another video. So this is actually my second time recording this because the first time both my camera and my keyboard was acting up, and so here we are back again. So for this video, I want to do a trade recap for Thursday, February 20. So on this day, I took a trade on the NAS100 that ended up hitting take profit. So we took a win. It was a small win because the trade had a larger stop loss, and so because of that, I basically had to trade with a micro lot, and because of that, I didn't want to be aggressive and try to take, price to full target, right? I don't want to get greedy. So I was perfectly content with taking it to the first target. So it was a small win, but nonetheless a win, right? The account at the end of the day moved up, which is what we want, right? We want our account balance to continue going up. And we was fortunately able to do that on Thursday, February 20th. So as you can see, based on the Forex Factory calendar, because before we even open a chart, this is where we want to stop at first. We want to see what is expected to happen as far as news. And on this day, we only had news at 8:30, which, for those of you who've been following here, 8:30 is typically when price begins hunting liquidity, and we have a red folder news that happened here. Now, when this trading day happened, this President Trump speaks event was not on the calendar. So and it really doesn't matter because this is PM, right? So it's happening in the night, so it wouldn't even have affect the morning session since our session that we trade is from 9:30 a.m. Eastern to 11 a.m. Eastern, and that is what we trade for the NAS100 and the S&P. I might also jump into the next day of Friday, February 21, briefly in this video, just because I didn't take a trade on this day, but interesting event happened on Friday, so I'll show you guys what happened there. So jumping in, here we are on the NAS, and normally if you guys have been following my channel, um, I usually have the S&P and the NAS side by side. That's how I normally trade. I have both pairs right next to each other. In this case, I'm only focused on the NAS because that is the pair that took the trade on. But pretty much know that both of these pairs have been moving in tandem almost identically. So what I'm explaining to you and showing you on the NAS is pretty much what's literally been happening on the S&P. So let's us talk about the bias, right? This, if you've been following my channel from the very beginning, I never used to factor in daily bias, but I quickly learned that daily bias is 80% of the work. So majority of your attention needs to be here because if we were to equate the daily time frame or the higher time frame as like a river, most rivers in the world, right, either go upstream or downstream, right? That's the same idea with price. On the higher time frame, you're basically determining which direction the river is going so that when you enter a trade on the lower time frame, ideally you want to be moving in the same direction as the river so you can ride the wave, right? And not, you don't want to trade counter trend because then that's lower probability and price probably won't move as aggressively or as much in your favor, right? So you need to understand which direction price is going so that you can take the most highest probability trades that are right. When it comes to trading, you want to give yourself an edge in the market. You're never going to be 100%, have a 100% win rate. That's not possible. You want to maximize your edge in this market, which is why we want to use a higher time frame bias so we understand where price is going. So here, right, if you look at this candle right here, this on this candle for Monday, December 16th, this was the previous all-time high. And as you can see, this candle right here traded through the all-time high and price continued going higher. Now, it has not given me any sort of sign that it has broken structure or that it wants to go lower. So because of that, my bias remains bullish and I'm going to continue taking price higher until it gives us a sign that it wants to trade lower. So in this case, right, you see some of these candles are getting exhausted, right? They're wicking. I mean, yeah, you're starting to see like pretty strong wicks and you're starting to see essentially like dojis form. But once again, unless there's a break of structure or some sort of sign that price wants to go bullish, I mean, sorry, if price wants to reverse and go bearish, I'm remaining with a bullish bias. And as you can see, after the all-time highs got cleared, you see gaps, right? Big gap here, and price is tapping into the gap. So it's continuing to go higher, so that is my bias. I approach the day with a bullish bias. So I'm only looking for buys, right? So now jumping into the 15-minute time frame. So the all-time highs right here, this purple line is signifying the all-time highs. And as you can see, these two candles basically formed a double top or quote unquote resistance, right? So we know that a lot of orders are up there. So because we are bullish, that is a legitimate target for us to go after. So I'm just going to fast forward a few candles, right, to arrive on the 20th because that is the trading date that we're looking to trade, right? So, okay, cool. So remember, guys, we are bullish on price. So what we want to do first is once we get to 8:30, which here we are, 8:30 in the morning, I can do a vertical line here at 8:30. So now on this vertical line, we want to look left. Remember, we are bullish on price. We want to look left to see where is the most um, obvious swing low prior to 8:30 so that if price snags it, right, like the liquidity, we can trade price higher, right? So sometimes, oh, in this case, right, the most obvious low is right here. So I was gonna say is sometimes you have to look on the lower time frame, say even on the 1 minute time frame to see where 8:30 started, right? So on the 1 minute time frame, right? So okay, so after 8:30, right, we're seeing like pushes down. So we don't we sh there's no reason to use that low right here because it looks like it we we can't even use this as a low anyway. So yeah, so this is the sell side liquidity right here, right? Because here we have the 8:30 candle. This is the most obvious swing low. So here we have the sell side liquidity because remember, we want to take price up. We want to take price higher because we are bullish on price. So we have that there. So now we can drop down to the 5 minute time frame. We can essentially get rid of this, right? And then on the 5 minute time frame, we can fast forward until we get to 9:30. So here we see this aggressive candle push down at 9:30. And as you can see, clear as day, this low clears this push down, this candle clears this. Now, I wasn't the biggest fan of this move just because if you notice here with this aggressive bearish candle, this wick cleared this high right here, right? So remember, if we are planning to take price higher, I want there to be reasons for price to want to go higher. If we have this wick here that clears out a high, then that's basically one less liquidity pool that we have or one less target to take price higher. But you don't necessarily want to give up on the trade, right? You don't want to just like close your computer because you also don't know if on a rally down that it can leave additional like targets to then take a trade back up, right? So it's not ideal for like price to come up and take the liquidity here, but you also don't know what price is intending to do. As far as like it could potentially form other highs or other equal highs or leave gaps as far as fair value gaps to potentially take as targets to the upside. So you just have to still be patient. But obviously this is exactly what we want to see. We want to see price aggressively push down and clear the liquidity. So this is what happened at 9:30. So now what we do, because liquidity was taken, we want to stalk price to see if it's going to deliver us a break of structure to the upside, a fair value gap to enter for a buy, and then if we could take price higher, um, two different targets. Now in this case, right, we have an aggressive bullish candle, so then I start dropping down to a lower time frame. I'll be on the 5 minute and then start dropping lower to see if there's ever any break of structures or fair value gaps. So no break of structures in any of these time frames right here, right? Because the last structure point is here, right? That's the last high that was formed prior to this move down. So there's really nothing, there's no gaps anywhere. So I just go right back to the 5 minute time frame and I just watch price in the 5 minute time frame. And I just keep on going until I see another bullish candle. So the reason why you do this is so that one, you avoid all of the movement on the 1 minute time frame, right? And two, it's so that if price actually does, like if the momentum does shift to bullishness, you want it to be seen on a higher time frame, in this case the 5 minute time frame. You want a lot of momentum or momentum to be shown so that it can seem so price can basically tell you that it's more serious about trying to move in the direction that you want to take it, right? So you can see price is still moving down aggressively bearish, right? So you're seeing this low here got taken, this low here got taken, right? You're seeing that this candle is taking a lot of the sell side liquidity, which at the same time, right, clear as day, you're seeing a gap in the marketplace. So if we were to take if price were to give us a reason to go higher, we have a target here, we have a high right here, and the high that was formed, the high of the session right here, right? So we're getting targets on the way down, right? So these are things that you can mark as you're watching price to see if it's going to deliver you a setup, right? So we're just literally just seeing bearish candle after bearish candle, right? So pretty much price went all the way down. But the reason why we didn't chase price and take a sell is because we are bullish on price. Now, the one thing that I will highlight right now is that I walked into the session with a bullish bias. However, this aggressive move down here, right, with all the selling pressure, or like all the selling that took place, this essentially broke structure on the daily time frame. So we're technically bearish now on the daily time frame. But after I basically decide on my daily bias prior to the session is the bias that I'm looking at. Is basically where I'm looking to take price. So I'm only looking to take price bullishly. Obviously, after this session unwrapped, after it all ended, is when I realized that price on the daily time frame shifted to bearish. But right now, because I looked at price as being bullish, I'm only looking to take buys. So technically, this is a counter trend trade, but obviously I was not aware of that when I was trading, right? So here we have a thin 5-minute bullish candle, but nonetheless still a bullish candle. So I'm dropping down to lower time frames to see if there's any momentum to the upside, right? There's no, the last structure point would be up here, so this would not be a move that I'm looking at. Then we have on the 2-minute, we have the last swing point right here prior to this move. So if structure gets broken on 2-minute, it would have to clear this high right here. Now on the 1-minute, same idea. This was the last swing high before the last push down, so we would need this high to be clear. So right now, we don't have anything to do. Another bearish candle, so nothing to look at. Then we see another bullish candle, so same idea. We keep dropping down to lower time frames to see. So there's no structure, there's nothing that's broken yet. Even though, right, you see a high that gets traded through. For me, I consider structure break as the last move, as the last structure point prior to this, to the new low being formed. So on the 4-minute time frame, this would be the last structure point. So price would have to come up to break this before I consider it to be um bullish rally. Same idea here. 3-minute have to be this high. So you just keep cycling through. On the 2-minute, we have this as the last swing point prior to this low. So price would have to trade through this high if we want to take a buy, in the same idea here in the lower time frame. So we go right back to 5-minute time frame because we don't have anything. Boom, another aggressive candle. So now we continue dropping lower. Right, we don't really care about the 4 and the 3-minute because the last swing point is up here. Now if we go on the 2-minute, this is where I looked at the trade, right? So 2-minute, you see this candle here traded through this high. So at this point, this is what pretty much we have, right? We have a break of structure to the upside. Now, do we have any fair value gaps, right? From the displacement high to the displacement low, this is the entire range. From the high to the low, the last structure point, it was broken. Do we have a fair value gap within this range? Certainly do, right? We have a fair value gap here. We have a fair value gap here. And we also have a fair value gap here, right? Why? Because the candles that have the fair value gap and follow are all bullish, right? So this is gold candle, gold candle, gold candle, gold candle, right? So all of these fair value gaps are legitimate. Now, as far as targets, if we were to take a, a buy, right, what will be our targets? Now, obviously, this gap right here is, and I'll just mark it, I'll kind of highlight it like red, right? This is sell side imbalance, right? For value gap right here that's left. We have a high right here, high right here. So I would look at this high. This would be my final target. Why? Because this is the high that was formed essentially for the day, and this was one of the most recent highs. So it's possible that price can make its way up to it, but this final target here, I would not hold my position in full to the final target. I would only allow like 10% to like go up to that point. But anyways, this is what we're looking at, right? We see a target here, fair value gap here, right? You're seeing all these fair value gaps, right? Another fair value gap right here, right? So you're seeing all these gaps in the marketplace. Now, if we were to take a long, right? Say for example, we put a long here and a stop loss here and the take profit here. as a final target. This would be too big of a stop loss because this is 1,214 pip stop loss. So this is only a 1 to 1.25 risk reward for final target. So that's not really ideal, right? So because the stop loss is so big, I was open to taking one of the deeper retracements because I wanted to get a tighter stop loss. So this stop loss here is still 982 pips. So I was not a big fan. So I ultimately settled with taking an entry here with 777 pip stop loss. So this is still a lot bigger. I would say on average, the normal stop loss for a NAS100 trade is about like 250 to maybe even 350 pips. So this is obviously a lot bigger of a stop loss. So you have to trade with a smaller lot, at least with my position, at least with my account, since I'm growing a smaller account, right? I have a much smaller lot size. But this was the entry right here. So I basically got rid of these fair value gaps simply because of just the stop loss, and I was perfectly fine. There it is. I was perfectly fine with taking, oops, be fine with taking the trade right here with this fair value gap because then it's at least a decent risk reward. And if I were to take it to these targets, right, you still have a good risk to reward nonetheless. So I hope you guys are understanding the logic. So the logic is all about liquidity, it's all about rebalancing itself. So same idea here where we have fair value gaps, these imbalances, and like these highs as targets is the same way we're trading, right? So our entry is going to be an imbalance because we broke structure to the upside. So the algorithm should now be going bullish. And then we have these areas as targets. So this is the trade that I was looking at, right? And then as we, I just, I'll just do like this, right? So here, right, at 1050, so this is almost at the end of the session, price taps into the fair value gap. So now what I'm looking at in price, I'm looking at this high right here because this was the very last high that got formed before price tagged us into the trade. So basically, I will only move my stop loss to break even once a candle closes above this level here. And typically, I would take off at least 20% of my position when I move my stop loss to break even. Now, considering that this is literally a perfect one-to-one risk reward, and I'm trading essentially like a micro lot, I use this as my final target because I'm trading a small position. So because it's a big stop loss, a small position, so I don't want to get greedy. I want to take the easy targets, the low-hanging fruit. So I basically had my final target here. But realistically, if I was able to trade with a normal lot size, right, with having multiple, if it's like a point 10 or something, whatever it is, then I would be able to take partials here. Like I would take, a good partial here, another partial here, another partial here, all the way up until I get to final target. So pretty much, long story short, if we let price unfold, right, this was actually a long trade. And I say long because I'm an intraday trader. So usually most trades I usually enter and I'm out in like around 1 hour, but probably like 1 to 2 hours, give or take. In this case, remember how I told you that this aggressive selling move down here is what moved price to now be bearish. So price is technically now bearish on the daily time frame. So this was a counter trend trade, which now I understand why it took so long for price to actually make its way up. But yes, we were basically sitting in drawdown and price was just going up and up and up. Then it got close and then it went right back down. And remember, guys, I'm only moving my stop loss to break even. Well, in this case, because my final target was here, I didn't really do anything. I just let price play out until it hit this target and took me out the trade. However, you know, I basically left my position just like this. I didn't move my stop loss up or to break even because price needed to clear this high. So we continued on. Price finally tripped it right here. So it took about it took about 3 hours from when price tagged us in to finally hit the first target. So remember, I was out completely at this point right here, which is a one to one. But if I didn't have, a micro lot. I was trading a point zero 0.01. If I had something bigger, then I would have been able to take a good partial here. At least realistically, I would have closed at least 50% of my position here. But because it took so long, if I had a regular size position, I would have closed off 80% right here, right? Because the price is moving slow, so there's no guarantee that it's gonna hit the higher targets. But remember, if I had a bigger position, I would have taken partials here, here, and then up here. Interesting part is as we continue, right? Remember, price cleared this high, so then you would technically be running a risk-free position. So now your position is risk-free if you were to continue holding it up to the final target, which was the high that got formed. As you see here, price is going and tapping into both of these imbalances, so you would have taken additional partial. So by this point, after it tapped into this imbalance, you probably should have closed off at least 90% of your position. And if you want to have a runner that's going up to the final target, you can. And then as you can see, well, I'll just kind of speed it up. I'll put it on the 5 minute time frame, or probably on the 15 minute. Right? As you can see, boom, right? So if you just held it, stop loss at break even, you would have noticed that price eventually did come up and clear this high that we had as our final target, literally the next day for the next session on Friday. So that would have been a win for you if you had taken this setup. And now for Friday, February 21, that's when I came to realization that price shifted and is now overall bearish. Um, and it'll make sense. Why? Because if I just play on the 5 minute time frame, this is literally what happens at the next New York session right here. So price, even though it was counter trend, right? Price worked its way up. Why? To clear this high here, to clear liquidity, because remember, price is now bearish. With this move down, this aggressive move down here, it now became bearish on the daily time frame. So price went up to clear buy side liquidity before absolutely tanking down, right? Before price went down and tanked. So Friday was an important day because Friday basically confirmed our suspicion that we are now shifting to be bearish. And of course, in this case, right, if we quickly take a look at Friday's trading session, this push up here was at 840, and now, right, this 930 candle is just pushing down. So I was looking to take a sell on Friday, but literally price never came up and cleared this high. So there was never anything for me to do. But as you can see, price absolutely tanked. So today was a day where you do absolutely nothing. Well, Friday was the day where you did absolutely nothing. But of course, Thursday was a day where we took a trade that ultimately ended up an entry here. And then final target was at this high. So you would have been able to take the trade to final target. Had I been able to put a bigger position, it would have been a pretty nice win overall because I would have been able to take the price all the way up to final target. So that was the trade recap for Thursday, February 20. I showed you some of Friday the 21st, given that because of this day, price is now bearish on a daily time frame. As you can see, the current day on my computer, it is Monday the 24th. So that trading session just finished up. I was bearish on price as well. And now I'll just close this so you guys can see current day, present day, right? So this is what I was looking at, right? If I jump on a daily time frame, sorry for all this stuff. I know I'm giving you guys the bonus. I know I just focus on Thursday, but I love talking about this, so I'm giving you guys the bonus here. You can see this is what I mean. Thursday, February 20, this push down. What happened here? It cleared this swing low right here. So this move here is now push price to be bearish. And then Friday, this is what happened on Friday. There was no trade that we took, right? Another aggressive move down. So I knew coming into today, Monday the 24th, I was going to be bearish. And now look what happened on today's day. A move up that happened, but ultimately at 9:30, I was waiting for this high to get cleared to try to take price lower. Um, right as you can see, this was the 15-minute high that I marked up prior to 8:30. It got cleared, which is okay. But after 9:30, I wanted this high to get taken. That's why I have a sign right here that says waiting for another push above. Did this wick take it? No, it did not. What happened? It came down. Now these purple lines, as you guys know, I like to have my targets marked in purple, right? So you can see clear as day, purple low here, low here, low here. You have a gap right here, which I can mark this blue, right? Because this is buy side gap, right? So you have a gap here, right? You have like these would have been the targets that I took, but did price come up and clear the high? No, it did not. And price what came down, it tanked, it cleared the low, the low, the low. So I was planning to take price for a sell, but price did not give me what I was looking for. Price did not come up and clear the high. So it didn't do that. So there was nothing for me to do. And price absolutely tanked all the way down and cleared the low. So remember, we're still bearish. So for the rest of this week, unless anything changes, we are still going to be bearish for the week. So if you found this video to be helpful and beneficial, do leave a like and subscribe, as I will be posting more content soon, right? This is my trading journey, and I want to show you guys the logic, what I do, how I trade, so that it can hopefully begin making sense to you guys, and hopefully you can adopt this strategy or begin learning or see the market for what it actually is. So once again, guys, this is Joel, and I'm out. See you guys for the next video.